Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, March the 30th, the year 2020. Let's talk trading, the Walmal method. I just realized something. It's still actually day 23, not day 24. So let me switch that back. And we have Walmal on the line this morning.
Good morning, folks. How you all doing?
Okay, now, fellow traders, just remember these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And remember also, boys and girls and non-binary traders, when you're trading, you have to put in the preparation and the opportunity. And when that opportunity arises, you have to take action. And if you wind up making money, that's luck. But I think I'm going to add something to the screen here. If you lose money, that's going to be skill, because you're only going to lose what you're willing to lose per trade, because that's part of the risk management. So, as I mentioned earlier, Walmal's going to join us, and you can see here on the weekly chart we still have some gaps to fill, and this is going to be his confessional today.
Yeah, and I like what you just said, where the amount you lose is your skill, and I went and jumped in on a trade I probably shouldn't have jumped in on, because I broke my rules, and I broke my rules, and I lost money, and I was down 10 pips. But the skill of it was I was down 10 pips, and my risk was managed, and so it didn't bother me. I wasn't happy about it, believe me, but I spent the last hour now just making it up, and now I've made up those 10 pips plus some. But it took some skill to get out of that mess, and part of that skill started right off in the bat, managing the risk, knowing how much I was willing to lose on that one trade.
Yeah, it's really important. Definitely important. And we can see the GUs right here at the 124 number. And we were actually trading different things here. And at the 24.20, I had actually went short at 24.25. The H1 candle was red, and that's a psychological line. And I actually exited at the 20 line, because if you can see over here to the left, this big M1 candle, I was saying that was the return bar. But now, if you know anything about candle patterns, you can see that this here is big, and all these candles here are inside it. So this was a master candle. And after I got it out of the trend, I said, Walmal actually supposed to actually go short here at the 20 line, because that was the Walmal method.
That's right. And you had two things there that were really forecasting that going short. But FOMO, you can't go and look at that. You got some pips off the table, and that's all we're looking to do is make some money.
Yeah, that exactly right. So it's like, I'm not upset. I'm not saying, oh man, I could have had, because I was, or should have had. I was telling Walmart, we can't talk like that anymore. We're gonna have to be each other's a watchdog on that, saying, no, you don't get to talk like that. And here we go, right through the double O line.
Yep, I went short there, just so you all know.
See, I told you I turned this guy into an addict. He can't help himself now.
I'm out now.
How many did you get?
I got 5.
Yeah. See, yeah, it's kind of interesting. Now, you might say, well, he broke his method. That's not the Walmall method, but he truly trades horizontal lines. He's trading what he's seeing. He's managing his risk. And so, did he really break his method? Because, like you said, you trade horizontal lines, right?
That's exactly what I'm trading, is horizontal lines. And what I saw was a horizontal line being broken, and so I took the trade. It was in the direction of the H1 candle. There was momentum in that direction. I mean, everything was really there. Now, preferably, I only would want to have gone short at the 24.20, but you got a psychological line there at that 00. Notice I also got out right away. In fact, when I went into that trade, I set the trade up for a take profit of 5 pips, period. I didn't try to go and manage it any further than that because I didn't know if it was going to bounce off of that line or not, or what it was going to do, because that's a psychological number, so it could go and react violently in either direction. And I didn't want to get run over by a train.
Yeah, and you were in that trade for what, less than a minute?
Yeah, I was in there for about 20 seconds.
Yeah, 20 seconds, 5 pips. And funny, Walmal was saying that he kind of hates this. We've been talking on the phone for a while here, and I think it was quarter till the hour, and he said, this is the part of trading I hate, waiting.
And I got to be careful of that. And, and we talked about this on Friday, a little bit, and the idea that, know yourself, know thyself.
Yeah.
Know what you're good at, know what you're bad at, know the things that are going to tempt you, and put some things in front of you to go and prevent you from getting yourself into trouble because of your own, I don't want to call them flaws, because you know what? If you take those things that some people will call flaws and actually use it as a tool, guess what? It no longer is as a flaw. It's now an advantage.
Right,
so
right.
Take those things and use them.
Yeah. So, for example, here, as Walmal stated that, we had this big candle here, and that's what's called a master candle, because once you get, I think it's 4 candles inside this candle, so you have 1, 2, 3, 4, it becomes what's called a master candle. And you can see here, it tried to break the 40 line to the north, but couldn't. So that was one clue of taking this short right here. The other clue was, of course, it was just a Walmal trade. And if you just do that, you just stick with that, with the method, sometimes you can see things that put the odds, or I hate to say odds because there's no odds in trading, but that's odds in quote, in your favor here. Now I said, could I have managed this trade better? Yes, but the same thing that just happened here when Walmal went short at the 00, he took his 5, it turned around and it moved, 10 pips. He could have been down 10 had he not gotten out.
That's exactly right.
Yeah.
And jumping on that master candle again, I just went and measured it. That's 30 inside candles that were there.
Wow.
So that's a pretty big indicator that, hey, when this thing breaks, there's a good chance we can get something nice out of it.
Yeah. So had I wanted to manage that trade another way, once I was up to 3 pips, I could have moved my stop to break even or break even +1. But one of the reasons I didn't do it is it's just like you saw this 1 minute candle here. When it hit that bottom, it turned around and it just shot up, and it can blow right through your stop like that. So I could have turned a 3 pip, say win, it could have been a 3 pip loss. So
that's exactly right.
Yeah, so you take what you can in the moment, and what happens after that is irrelevant. All your job is now you just wait for the next opportunity.
And that's all we can do is, as traders, all we can do is just wait for the next opportunity. And my rule book, what I call the rules of the road, we got to go and focus on the idea that there's always another train coming into the station. Don't beat yourself up over things that you could have. Just know that there's something else that's coming down the pike. And as long as you're managing your risk, you can still get in.
Yeah.
And that's the whole thing. Manage your risk. I know I sound like probably a dead horse at this point in time, but it all comes down to that. You got to manage your risk so that you're able to trade again, because there will be another trade that comes along. And if that keeps on, if that's true, and we know it's true, then what that means is eventually, even you get into a situation where I made a mistake first thing in the morning, well, it took me 1, 2, 3 trades after that to go get positive again. Yeah, but I was positive, and then I just took 2 trades after that. And now between those 2 trades, I'm up 10 pips for the day.
Hey, and that's your goal. So you gotta turn off your computer and go out there and play with the chickens now.
Exactly, go fishing.
Yeah, and there was one other thing about this trade here where I got out at the 20 line. I could have easily stayed in once again, one, because this was the short area. Two, we had the master candle. But the third thing was down here at the range. If I remember correctly, it was only around somewhere between 13 and 15 when I took this, when it hit this area. I could have said, you know what? Why don't I go ahead and just, put this, leave the stop in at 30. And since there's only 13 range, it's either going to have to blow through here or it's going to come down here. That's looking in retrospect. But now that you see that, you can add that to the exit playbook that you have. And I know you by now, you fellow traders that have been watching my videos know about writing your exit playbook. You could put that down and say, okay, I'm in the trade. It hasn't hit the range. I'm only up 3 pips. It's already gone out the other side once. So it would have to retrace these 3 bars here for it to get more range. So the question is, what's more likely? And you can see here, there's some there was a lot of trading here, but it fell. It came back. It only closed above there 1, 2, 3, and it fell back. And so, but you see here, it's kind of wide open spaces in this area. We had some some congestion, I guess you might call it, right here. And you can see here the same thing. This area right here is congested, but this coming down, it just came down nicely. And I'm talking about the GU.
Okay.
So was there anything else you wanted to confess?
No, I think I had my cathartic moment. So, but I mean, you think about it though, because of that one mistake, I made 20 pips today in order to get my 10 pips. If you really want to look at it from a, so those mistakes, they can add up and cause you some grief. But more importantly, because of all those trains coming into the station, you can go and get to the other side. It just may take some time to do it. That's all. And then you have to be super clean and make sure that you're really following your rules and really following your risk. Because there's nothing that says I couldn't lose another, following the rules, lose a second trade right after that. And, be down 20 pips potentially. So again, manage your risk.
Yeah, that's so important. And I think I showed you this screen yesterday, boys and girls, the new frequency distribution indicator, the 2020 version, where I added some features. And in fact, here, let me go in and show you a couple of the other options here. So the previous candle, let's turn this to a green rat reversal. And on this one, let's turn this to a red rat reversal. Now, where is it? That's funny. Now I can't show cumulative. Use day filter. Oh. High level. The previous candle here, bear. We want to use red rat reversal. And so you can see here, green rat reversal. You see it. You have some nice pips here that you could make. 2 pips, 1 pip on the red. 1 pip, 2 pips. So right here, looks like the green rat reversal pays off a little bit better than the red rat reversal. And the whole idea is once again, the reason I was looking at these was, like, for example, right here is a red rat reversal. Green closes, red closes, goes short here. And so I'm thinking of taking those trades inside of the trigger zone here, or the trade zone, which was between 24.20 and 24.30. So that's pretty much going to wrap it up for today, boys and girls. Thanks again to Walmal for joining us. And remember, fellow traders, It's not what you trade, it's how you trade it. So drain the banks. And if this is your first time here, come down here and click subscribe.